The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman. This is the Tiger Technicians Hour early edition. I'm doing this at 8:06 in the morning. It'll be recorded and played back at noon, my usual time. So the futures were doing very nicely. The Dow futures were up 85, 86 points, most of the night, in fact. And the E-mini was up, it was between plus 10 and plus 12 most of the night. Somebody must have said something, because there was a huge drop, because we just went down in the futures. The Dow went down minus 90, now it's minus 80, and the futures, S&P futures are down 9. So I'm not sure what's going on, but I'm doing this an hour and a half or less than an hour and a half before the market opens. Let's go through all the numbers now. The Dow closed yesterday, and I've been talking about this for a while. For my subscribers to my opening call, we went short. We were actually long from the 3rd of June, all the way, that was the low. We went all the way to the exact day of the high with a little tiny doji. Yep, tiny doji candle at a peak D, about a leg D. Next day was peak D. We were able, fortunately, using the Chapman wave methodology, to go short 7 points from the top. Now, that's fine. On the way down, we took profits, but now look what we've got. We've got a pattern that comes down very strongly, then bounces, makes that H formation, lowercase h, and then what I was talking about is that the chances are that we're going to go from a lowercase h to some form of a lowercase m. So there's another arch being formed, and that's exactly what happened. What I said to subscribers is, I'm rather surprised that the MACD finally, after all this time, having crossed negative way back, took it like almost to the 22nd, 23rd of July before the MACD turned down. And finally, yesterday, it crossed positive, but the Dow didn't make a new recovery high above the 26,420, was it 426? Yeah, 426 high of August the 13th. Yesterday, the high was right at the 50 period, this little dashed line, 50 period exponential moving average of 26,388. And I have a lot of Chapman wave automated, I'll show you right here. Oh, incidentally, I just went to the charts. The chart I have here is Fannie Mae, FNMA. We had a caller yesterday, spent a lot of time going through this. He was looking for $2.80, and then he was going to exit. I said, rather go to that 280, and if it gets there, it was a 250 something. I said, if it gets there, take a little bit off if you want to, but so far it's looking really good. It went right to 280. We actually went to $2.82. And then it stopped right there. So that was a spectacular move. So yeah, let's go. I want to show you INDU. This is Chapman wave automated, Chapman wave resistance levels. Look at this 10-minute chart is 26,333. 120-minute chart has 26,343, 26,396, 26,517. And the daily has all the way up to 26,800. So regardless of what happens now, there is quite a bit of resistance on the upside. Okay, that's what I wanted to get to. Now let's go on. We've got the S&P. The S&P futures, the S&P yesterday closed at 2922.95. Here again, did not take out that August 13th high. It's still right at 2940. And the futures right now are down at 2911. So they are down 10 points. I think that the lowercase h to the lowercase m is a pattern that I've seen so many times, and I suspect it's in play right now. The weekly chart is very important. I'm going to get to that in a moment. I just want to get this covered for the moment. Look at this rectangle formation. Remember, rectangle formation can last a lot longer than your patience. And I think we are stuck in this rectangle formation in the Dow and the S&P. Look at the QQQ, NDX 100 trading vehicle. Also did not make a new recovery high, even though here again, let me just circle this. The MACD did cross positive. That really should have produced a move that took the QQQs to the 190, 150, 192 area. It didn't. It's still right in the 188s. And right now we're at 187.12. I think that's a bit of a problem. The stochastic is rallying, but it's only at 60%. Those weekly charts, I'll get to them in a moment. I just want to finish this. IWM, same thing. IWM was very weak. It did make a new recovery high from 5 days ago, but it hasn't broken the highs that were made earlier in August. It's at 150.03 at the close yesterday. Now it's at 149.44. Not acting well, and that weekly chart is really struggling. I want to go to gold. Gold's had a little moment here to see whether it's got some reprieve from the sideways. Gold is in a sell signal to sell mode in the daily chart, but that's only descriptive because it's been closing under the 9-period moving average. The MACD is turned down. Let me just circle this so you can see in the daily chart. The stochastic's down at 69%. I like it at 80% or higher. And this is just in this rectangle formation, going to take its time, stuck in this range, and it's up 3, almost 4 at 15.12. Let's see what the dollar is doing. The dollar right now, the dollar is, well, I'm a little behind, but I've got it up 21 ticks at 98.41. Someone in the den has the most current. I'm usually a little bit behind in the dollar. So 98.41, really nice because it actually started a breakout of the resistance, and it's in a leg B right now. I'm still calling it a gray leg B. It doesn't have the strength yet for me to say this is a buy. This is like a buy signal, but it's not really a buy mode. I can't guarantee it's going to go to a D or even to the requisite test of the 98.68 high that was made just on the 1st of August. So let's see how this, in the next hour or two, in the next 10 to 15 minutes, we will know more about the dollar. In the meantime, back at the ranch, let's see what we've got. The TLT. I'm going to go to bonds themselves. This is a continuous contract down 230 seconds at 164 and 230 seconds. Made a peak E. Like the MACD has just touched the green line fast moving average to the red line. I'd like to wait today to see if it crosses negative. But so far, I'm thinking that let's go to the TLT. That'll be better. Yeah, down two ticks at 143.58. A peak E at 148.60. I'm watching this closely. What I said to subscribers, if the TLT, the iShares 20-year Treasury Bond Fund, closes below 142 in the next few days, that's going to tell me that yields are actually going to rally a little bit and that bonds will come down and that we might see a little change of trend. And I'll look at crude oil because that they don't go together, but I'd like to look at it. Oh, down $1.30 at 54.04, going to the bottom of this rectangle formation. So this is a very important session because it's the end of the week. We want to see where the VIX closes out, VIX.X. What is it doing right now? The VIX is up. It's at 17.79. It's up $1.11. Hit the 200-period moving average. Oh, this weekly close is going to be so important. So we're about to get to our first break. There's going to be, this is the 8:15 early morning edition. It'll be repeated at noon. And if you have questions right now, you can call me at 877-927-6648. We were very fortunate. We woke up to find out that one of our stocks got taken over. It was in a takeover situation, up sharply, very nice. And one of our stocks made an all-time high again yesterday. So that's nice. I'll be back. Basil Chapman, Target Dow futures are down 100.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi, folks. In the den was posted that a number of stocks had earnings yesterday, important stocks, and HPQ, Hewlett-Packard, down 9%. Oh, my. Foot Locker down 12%. Ross Stores down 4%. The Gap down almost 3%. Intuit up 4%. Salesforce is up 5%. That's good. And VMware is down 6%. But VMware, it was announced, is going to take over Carbon Black. Carbon Black happens to be one of the stocks we own. And yeah, it's great to have a takeover. It's a nice big bounce. But you know what? I think the stock would have gone, it's a cybersecurity stock. I think it would have gone much higher. There it is. So CBLK, and I'm just a little upset because it had this cup formation. I drew it in. We were targeting 26.11 to the 27s. It hit 26 overnight. It hit 26.06. It's almost there. But that was only leg C in the monthly chart. Now, I don't know yet whether it's going to lose its name and become part of VMware. VMware is a great stock. Some of you might recall way back when it was an IPO, we were really lucky. We had over 100-point gain in VMware on the upside, and then we actually shorted and had a 100-point gain on the downside. And then I just took it off the list for some reason because I'm not sure, once you're done, you kind of feel you're done. But that stock then went from $100 to $206 back in May of this year. That's incredible. Anyway, it's down 9 at 138 after the high of 206 just a couple of months ago. I'll have to do a little work because it's a great company, so maybe just folding and being part of VMware is one thing, or just taking gains and then VMware will be a different trade is another thing. Yeah, I agree. 6% doesn't seem much of a premium, although it's come all the way. This is a big move. We actually initially had it in the 16s and 17 area, but only got back in recently at 22. But that's a very nice game. But yeah, not complaining. All right, moving on. So I wanted to go through a couple of things here. I want you to talk about the weekly charts because we're wrapping up today, Friday. Look at this. The Dow I had no choice based on my work to say that this is a peak E. This is the M-shaped pattern that you get in the MACD every once in a while, where there are only two peaks on the right side. If that was a peak D at 26,695 in the Dow and pull back, and this became peak E/A and F/B, that would have made a lot of indecision for me. But because there was no other way to count it but a peak E in the Chapman wave, remember, we're always looking for at least a D. It can go to E, F, and G. But that is where D is where you raise your foot off the accelerator, you put your hover over the brake, and you wait to see what's going to happen. If there's a potential instant restart, which there was, but I said I don't see it in the technicals, so I didn't even circle it, but I thought it could more likely be an E. But if it fell below this low that made the peak D, the low of the candle of 26,465, the 28th of June, I had to call that an E. And if it's an E, it means that it's going to pull back. Watch the MACD, watch the stochastic, because if it goes from over 80% to under 80%, it's now 61%. You've got your double camel hump. I always have these expressions. The MACD, where you've got the second arch on the right, failing. And that just suggests, if nothing else, you've got time on your side to consolidate. It could be price. How do we gauge the price? Well, you've got a very simple, I love to use simple techniques. Hopefully, I can continue to use simple techniques. Sometimes I make it a little too complicated. But look, at 21,712 in the Dow on the week of the 28th of December, it runs up the low of June the 3rd. Remember, we were very fortunate. We had call positions in the Dow. So when it turned up, even though it was down somewhat, as the December 26th turned to the upside, turn around within a day, we were doing very nicely. So, and then we were fortunate in April to get a day before the high of 26,695 to the downside. Fortunate enough to get the exact day of the low, June the 3rd. Fortunate enough to get the exact day of the high within 7 points, and we shorted. Now, we've taken quite a bit of profits. We still have a position on the short side, but we still have all long positions. That's the only short we have. So this is it's an ironic position to have when you have long positions, but you're looking for a consolidation. While we're trying to do things, as I did with Carbon Black, how we've done with a couple of our other stocks, CCI, which is a REIT, it's in a different category, and it's at all-time highs. I don't know if it'll stay there, but it's at leg C. This is a tough thing, and I said, I think that picking the exact bottom here is going to be tough. It's just not going to be easy because of the sideways H pattern. There's a whole panoply of techniques that I use for the H going to the M pattern, retesting the lows if it even gets there. Whoa, this is going to be a tough situation because finding the next low will be easier if we break under 25,339. But if we just hang around here, maybe that 25,339 of the 15th was the low. So this weekly chart is in a sell mode, but it's not. It's almost the same, or maybe a little less even than the pullback that was started back in April, from 26,695 to 24,700. Yeah, that was 2,000 points, and we've had a little less than 2,000 points now. So this is going to be important. I should make this not blue. I'm just going to make it kind of lightish color because it's just a benchmark number. So that's the Dow. Look at the S&P. It's a little bit better than the Dow, but it still has the same characteristics. With the uptrend line from the low of December to the low of June, we've broken that 3 times already. Well, let's say 2 times already. We don't know where it's going to be at the end of the day, but it's still hovering right on it right now. It is at the 14-period moving average. It's under the 9-period moving average in the weekly. The MACD is negative. The stochastic is negative. Hey, this says to me, this is also in a sell mode in the weekly chart. That's just a designation. It's not saying sell mode, oh my God, sell everything. It just means the description is that it's gone from a sell signal to a more important decline of a sell mode at this very moment. That's all. Okay. There are other techniques that say, hey, you start to break certain support levels, watch out below. And that's kind of what I'm thinking here, that there will be a test of the Dow 25,000s. That's just, we'll see. And the S&P, that'll be a test of the low 2800s. And if you go to the QQQ, it's the same thing. A much better chart than the S&P, which was better than the Dow. I'm still calling this a sell mode with a down arrow. But here it's a little trickier because the MACD just slightly went negative. MACD is negative at, the MACD is negative slightly with the stochastics at 69%, not bad, it's just below 80%. And the price is holding right between the 9 and the 14-period moving average. So far, the NDX 100 trading vehicle, the QQQ Trust series, is holding okay. Now, if we go to, I want you to go back to gold to see where it is. Is it higher? No, it's only up 2. And what is the dollar doing? Boy, this is going to be an important day. The dollar is still holding well, up 21 ticks at 98.41. Our dollar, long from April of 2018, can it break out of this little downtrend? I'll be back in a few minutes. We'll talk about that. Basil Chapman, early edition, 8:26 a.m. in the morning, not 12:26 p.m. as usual. I'll be back. The Dow futures are down 177. Ooh, bad news. What did the Fed do? I don't know what they do. They stuck.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found the computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. I don't want to get into this whole thing with the Jackson Hole. It just, W-H-O-L-E with a Jackson, H-O-L-E. What do we know? They could say anything, but look at this chart here of the E-mini, the 10-minute. Makes a peak F right there at 4 o'clock, yes, on the 22nd, right? Closes at 4. And 2932.75. It pulls back, goes sideways, and then all of a sudden it starts to rally, and it rallies from the 29.18 area, and it goes to a peak D, makes a kind of a cup formation, a bowl formation because it goes sideways, and then breaks out and makes a high at 2:10 this morning Eastern time at 29.36.75. And then it goes sideways. You remember my expression, sideways action can last a lot longer than your patience. And even here it holds the pink 200 period moving average in the 10-minute E-mini chart. And it tries to rally and it goes back into the rectangle high. And then out of the blue, there's this bad news and kaboom, before you know it, look, you smash below it. And right now I have Chapman Wave automated support levels. I'll show you right here on the left. In the 2-minute chart, 29.02, 28.98, and 28.95. That's really important to try to hold. You break under that, and it's not going to be very pretty. So just wanted to show you that, the technical, do we have any idea that there was going to be bad news right there? But look how many times you started to test the 200-period moving average. Once you broke that, and once the two moving averages crossed negative, look what happened, kaplop. Now it's trying to find some kind of a base to at least attempt a rally. All right, let's get back to our nitty-gritties here. So the dollar's pulled back a little bit. Now it's up 17 cents, but it did make a leg B. I like that. I still think that the dollar is the icon. I call it the Harley-Davidson icon, not Harley-Davidson, the company, just the icon. For those of you who live in other countries and you're listening, you know very well when I say Harley-Davidson, you know when I say Louis Armstrong, you know when I say there are just certain things about America, Empire State. You notice there are certain kind of measures of a certain success over periods of time. I mean, Louis Armstrong was jazz. I mean, I remember back in South Africa as a youth, I used to listen to Louis, I listened to Ornette Coleman, I listened to all these American jazz musicians. Around the world, over the years, I've been so impressed. I've met someone from a little village in Russia, and they said, oh, yeah, when we were growing up, it was illegal or something. It was a big issue. But we would get these records, and we would play them very quietly. Around the world, it's like that. And that's why I'm saying I think that the dollar is representing the economy as being strong thus far. And that's all I'm saying. And therefore, I think the dollar will be going higher regardless. All right, other things. Gold is a currency of fear. It's had a spectacular move. But it seems to me, just at this particular time, that it could be stuck in a range, just trying to digest whopping gains from the 1,300 area to the 1,500s. It just needs a little time. But so far, the technicals in the daily, the weekly, and monthly are all saying, hey, you can pull back for a little while, but you're kind of in play as a currency of fear. Now let's go to bonds. The bonds down 630 seconds at 163. Let's call it 164. This is kind of important for a number of reasons. Why? Because they too have had a really big move. That means that the yields, I wonder if I can do this. I haven't looked at this all week. I'm going to go here. Hopefully I've got enough. Yep, I've got everything. I've got my new computers. I've got plenty of memory. Here we go. And we're looking at the 30-year is the white chart. The brown is the 10-year T-note, and the cyan is the 5-year. Look at this arch formation and look at where we are. We went in the 5-year back to where we were back in November of 2016. The brown one is the same thing. No, it actually goes back a little bit further. The white one, which is the inner leg D to the downside, obviously making a peak D today, if there's no new low, a trough D, has gone all the way to where it's been. That goes much further back. And that to me says something. Whoa, much, much, much further back. I forgot to look at it going back. I don't even go back enough. So the white one, which is the 30-year, goes back decades, years. I don't even have a 30-year on this particular chart. It used to be there. I wonder if I can squeeze even more. I can. No, look at that. Here's the high back in 2000, May. Cyan, all these guys are up at the 6.2 area, 6.2 for the 5-year, for the 30-year. And here we are way down at the 21.2.1 area. All right, so I wanted to show you that yields are at historic lows. There should be some kind of a bounce at some point very soon, but I think it's a bounce. And I think the international pressure to push yields lower because governments are selling bonds. They want to get the money, and therefore the yields are going down. I think that America is just forced to do that. In reality, from the economic news that's come out recently, normally over the decades, I would have said, hey, it's just normal for the Fed to raise a quarter of a point here, a quarter of a point there. If people are wanting to borrow money, then let them pay a little bit more. That's kind of the way it's always been. This is very unusual. And it seems to me the Fed is doing something very quietly that we've got to be aware of. All right, enough with that. Philosophy. We're looking at bonds right now, down 232nds, holding okay. A couple of things I want to look at. Look at this. I had questions. Am I going to remember them? I wrote them down. Surely I wrote them down. Did I? Did I? Could I look at... Oh, did I do that yesterday? Let me think about this real quickly here. Yes, I had a question about, so a couple of things. Let me do this right now. This is Fannie Mae, FNMA. Yesterday, we were looking at this. We had Greg calling. Greg had a beautiful entry into Fannie Mae. He got it around about just in the 214, did he say, area? The low most recent low was 202. What should he do? Well, I said to him, it was a 250s. I said, I like what I'm seeing here. It's going into this rectangle formation. It wants to go to the upper part. And if you look carefully, you'll see this in the weekly chart, the orange 200 period moving average. It's mostly been above that in the 2s and lower 3s. And all of a sudden it goes back to 2, just for 1, 2, 3, and barely this week for a day or two. And then it spikes back up. It wants to be back in this 280 area. So let's see what happens here. But he had a plan. And I just said, adjust your plan only slightly. Stick to your plan. Take something off at 280. That was your target. But I would keep some, just even if it's for a day or so. Let's see what happens here, because this is acting really well. So that's Fannie Mae. The high that was made back in the week of the 24th of May at 3.27. Can it get there? It looks like it wants to, because the daily MACD and stochastic are fabulous, and the weekly chart has turned up. Monthly chart is still pretty good. So I'm just going to say, stick to the plan, Greg. I think you picked an absolute winner, beautiful winner here. It's almost 2.14, 2.80. Oh, yeah, 30-something. Very, very good gains. Congratulations. I'll be right back. Basil Chapman. This is the Tiger Technicians Hour. I'll talk about my newsletter when we get back, and I'll also talk about the webinar I did on Wednesday night. I think all of that is appropriate right at this time. It's an important, as we're getting into the end of the summer, I think it's important to be looking ahead, and that's what that webinar was.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
It's amazing to think that Tom O'Brien started his weekly gold report 17 years ago, with the first issue published April 7th, 2002, when gold was trading at under $300 per ounce. Gold peaked at more than $1,900 in 2011, and after spending many years consolidating at lower prices, gold may be poised for its next big run. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, South African rand, as well as 25 different mining equities with specific buy-sell recommendations. As of April 1st of this year, the Gold Report currently has 8 active positions with an average unrealized profit of almost 8% for each open trade. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your Gold Report subscription today, visit the front page of TFNN.com. Don't let gold's next big run pass you by. Sign up today. Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So looking at the 2-minute E-mini chart, 2902, 2898, 2895 are Chapman Wave automated support levels. You can see there's been a turnaround. Now 2913. 0.25 is going to be the resistance to monitor, and if I said in the den that it needs to break sharply away from the 2907s, which was the support that broke in the 5-minute chart, needs to move away from that, and so that makes 2915s this morning's next level of resistance that needs to be pierced. Okay, going back to the charts, and also I want to talk a little bit about my newsletter. It's called The Opening Call. Daily newsletter, send it out every day of the week, even Saturday and Sundays, most weekends. I start preparing for the Monday opening call newsletter send out, so I start sending charts Saturday, Sunday. I'm going to be on vacation next week. I'm going to get out as much as I can. As you know, I always like to do this. I just feel that it's really important for me, for my mind, for everything, for my trading ability, for everything that I have, is to be able to put together, articulate all my thoughts in some kind of a package so that I can guide my subscribers, as I've tried to do for the 15 years or so I've been here at TFNN, through the Straits of Gibraltar without hitting the rocks. I think that's the most important thing. So the opening call, we have, I believe it's, 6 positions on the upside, long positions. One of them, as I said, has been a takeover candidate overnight, had a very nice spike. Another one is, and that's Carbon Black, CBLK. That's doing very nicely here. And it's at 26. VMware is taking it over. There was the cup formation. CCI is another one using the Chapman Wave methodology. What I said was, and we follow this, I treat my newsletter as an education, as an ongoing course. I showed the cup formation. I showed the chance of a left side, right side price time match. The cup formation with the plumb line right there with the low of the 19th of July at 125. From the left side, 137. 20th of June high, and it got there quicker. I typed in your Chapman Wave cup and ladle breakout to at least a peak D. What it means is if before you get to a D, you break above that left side high, there's a real good chance you're going to keep, and you break it in a shorter time span. That's even more important. It means if the MACD and stochastic are good, which they were, there's a really good chance that you're going to go not to just a C, but you should go to a D. You can even go to an E, but at that point, you've got to be prepared that there could be a sharp pullback. I don't know if normally you'd get a pullback towards the 137 breakout lip on the left side. I don't know if we're even going to get that in this stage because the REITs are very important. Crown Castle in the towers industry. It's just really every time frame is looking excellent. Even the 120-minute chart, which is at a leg D, is doing very nicely. So most importantly, what I am looking at here is that the REIT, we're in at 135s. It's at 140 pre-market. It's at 146.23. We took a little bit off yesterday, almost 10 points. I just thought, at 10 points in just 2 weeks or so, that's really good. That's good action. So we're out of that. And what I am looking at here is that the whole sector of the REITs have been really good. So there is a stock, MKTX. I hope this is the one, MKTX. This is called Market Access Holdings Inc. It's an electronic trading platform in the credit market. Look at this. It's going to its Chapman Wave inside track repellent zone right there, all-time high, leg D in the daily, leg D in the weekly, leg D in the monthly. And this is an electronic trading platform in the credit market. So they are directly related to the whole bond area. I've seen this. My son mentioned it to me some time ago. I think we had it just briefly. And I can't believe I left it off the radar, because this is the way bonds are being traded. You can see it, how beautiful the relationship is. Look, keep your eye on that. Now I'm going to go to the TLT. Look at the TLT. Look at that. Down 17 cents right now. Lehman Treasury Bond ETF. Let's go back to MKTX. MKTX right now. And at 392. It's just, the reason why I didn't do it, I try to avoid, we do have triple digit stocks, but when it gets to the $390, $400 or $280, I'm just a little, there I have fun people that buy my newsletter. I have hedge funds. So yes, it's easy for them. I have some people that it's not a problem to buy a $400 stock, but I also like to mix it up. That's the reason why we got that cyber stock in a low digit number, so that we could, everybody has a chance to get it. Oh, of course you could buy 10 of these. You don't have to buy 100 or 392. But I just think of it in terms of a panoply of choices that my subscribers can have. And sometimes we'll have a single digit stock, a $2, $3 stock. So that's what I'm looking at. So this is just a clue. I mentioned to my subscribers, let's keep an eye on this. Another one is CTAS. For any recessionary fears, it's down again today. It's made a high with the Chapman Wave 2 silent dojis above its all-time high of the 20th of August at 270.36. I'm watching this closely. This is the clue. If in a week and a half, by the first full trading week of September, let's go out. If it is under 255 on a weekly basis, if it closes under 255, it's 9 points below where we are. That's going to tell me that you've got to be a little careful here, not so much for the recession, but for the cyclicality, the rotational cycle we've seen throughout the year, where some sectors have been blessed, like the oil industry. They're in a recession, all right? So we've got to be looking at this closely. This is overalls, uniform rentals. I want to keep an eye on crude oil. I like crude oil actually rallying with the market, because it's just a confirmation that the whole industrial area is actually working. Oil's been needed. Here it is, down $1.54 at 53.81, stuck in this range, also making the pattern I've been talking about for weeks now, the arch formation, Chapman Wave lowercase h. And look at that. And look at the weekly. I already drew it in. I said we've already tested the left side low so far successfully. Keep your eye on crude oil. It's going to keep your eye on the IYT. I hope I can. Oh, I had questions yesterday. I'll have one more break, and then I'll have a real brief moment to see if I can find the questions. I'm so sorry. A couple of questions came in late yesterday. And, CGC was a question, so I'll get to that. So the transportation index, not doing very well, 181. All-time high was 209. The recent July high was 195. Here it is, 181. And it keeps making lower lows and lower highs. I'm concerned about that. And I do think we've got a couple of weeks here of choppy sideways action. So that CGC was what I was asked about. CGC, oh my goodness, down a penny right now, pre-market at 25.10. This is going towards the 23.38 level of the 200 period moving, the orange 200 period moving average of the weekly chart. The MACD is very poor. Stochastics at 7%, but not showing a sign yet of strength. And that monthly chart is canopy growth, medical marijuana. The one I've liked the best, but we don't have a position in it, we did at one point, is GWPH. This is GW Pharmaceuticals, medical marijuana, or cannabis. I think that this is the better one, but even there, I'm staying away until I feel a little bit more comfortable with regulations. Remember, this has been around since the beginning of time, some kind of cannabis product, but it's only been on the stock market for a little while through the MJ, and that is the alternative harvest ETF cannabis sector. This is a baby in the New York Stock Exchange terms. I don't care how long it's been. It has to learn how to get through the legalities, all the documentation. There's a lot going on. I'll be back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Hi, folks. Thank you, Pete, over in England. Yes, I know that. He said, hi, Basil. I heard you the other day getting a bit riled up about your troll. I suspect that if he thinks he's getting under your skin, he'll only get worse. No, he's been around a long time. There's the only person out of all the 15 years I've been here that's kind of heckled me. But I like that. That makes for good TV. It doesn't get under my skin one iota because he's talking about one thing, I'm talking about another. He's got an opinion. It's fine. I respect his opinion. I think he's going to be right. I just don't think he's going to be right now. That's all. So, yeah. So, folks, my newsletter is called The Opening Call. We've had some really good trades. We've got some new trades on. Dividend-type trades that I'm trying to get some capital gain plus dividend in this environment. There are some stocks that are really looking like value stocks in a sense, even though they can turn out to be big PE winners if the general market eventually, later this year, which I think it will, starts to get on track and really soar to the upside. So I didn't do the XLF, but I don't really have time. You're going to go to Larry Pesavento if you're here at the 9 a.m. show. Of course, wonderful Larry. Should be a great show as always. But if you're listening at noon, stay tuned for Steve Rhodes. You've got Dave White, and then you've got Tom O'Brien. So check out my opening call now. I did a webinar on Wednesday night. I'm very pleased with that webinar. It's really pertinent to exactly what we're looking at for subscribers in my opening call. So check it out. Whatever was there, it isn't old because it was Wednesday night. It is absolutely current. And every day we're looking at what's ahead and how to prepare for it. And we're trying to look even more than a day or two. We're looking a couple of weeks to months ahead, and that's really important at this particular time. So check it out. I think you'll find it hopefully beneficial. And as I say, we have a takeover target from last night that from one of our stocks that got taken over, and we do have a stock that's at an all-time high. I think that's pretty good. So I'm just about to wrap it up, and before I wrap it up, keep your eye on the VIX index. I don't like these pre-market skedoodles up and down and up, because the Fed could, at 11 o'clock, an hour after the Fed speak, we could be up 100. You could be. I just think this is a choppy period. Treat it as a choppy period, and just you can have stops in. If you love your stock, just widen the stop, or just take a little bit off. You can always put it back again. Don't get excited, says the man who just got excited. Don't get excited. So have a wonderful weekend, everyone. I'm on vacation next week, and I will be doing my newsletter. I'm not sure if I'll be able to do a show.